Facebook world. We're coming to you again, once again, live from the National Harbor for the CSC All Things Real Estate Podcast. And CSC stands for Chris, Sean, and Cliff, or Cliff, Sean, and Chris, however you want to read it. Okay? And we're coming back to you for the second week in a row. And this week we're going to talk about some things real estate. You know, the spring market's getting ready to kick off. And we have some questions from some people from before. And we want to answer those questions for you. And I wanted to say first, I had time today, last night, to make my mother's homemade pound cake. Okay? My clients seem to like that. And once you close a deal with us between Chris and Cliff, your housewarming gift will be the pound cake. Okay? Again, I'm Sean Andrews with Potomac Mortgage Advisors, where I handle first-time home buyers, move-up buyers, refinances, and investors purchase their dream homes. Okay? And to my left, I have Christopher Logan.
Christopher Logan with Remax Allegiance. Again, all things real estate. People forget, but that includes new construction, investment properties, multifamily housing, downsizing, upsizing. If your kid needs to go away from college, it makes a lot more sense sometimes to purchase a home, let them stay in it and rent it out. So, Chris Logan, Remax Allegiance.
Clifton Durham, TD3 Insurance Agency and Associates, where I cover all your property and casualty investments. It could be your home, your auto, your commercial businesses. Clifton Durham, TD3 Insurance Agency and Associates.
Awesome, awesome. Okay, guys, this week we're going to talk about some questions that were received from last week about the home buying process, okay? We all have some questions that were asked, and I'll start. My first question is, what credit score should I have in order to purchase a home? Okay? Great question. That's a big question, all right? Now, for me personally, we go down to a 540 FICO score, mid-score of 540, all the way, of course, up to 800. Okay, but when you're at that 540 to 580 range, you got to have reserves. Your debt-to-income ratio, which we'll get into at another time, can't be but so high to get that through. Okay? So to answer the question, from 540 to the low, all the way up to 800, okay, to get you to a house. What you got, Chris?
Well, the question I get all the time, which actually came in last week, is always, when is the best time to buy a home? And there's all kinds of things about seasonal and things of that nature. But for me, the best time to buy a home is when your desire to purchase aligns with your housing needs. You think about what we have going on right now. There's talk about interest rates, possible recession, home prices, but there's still people out there buying. There's still homes out there getting multiple contracts. So people still have a compelling reason to buy. So essentially, I wouldn't stave off purchasing if you have a very specific need to own a home. Don't continue to rent and pay the landlord's mortgage. Yes. Don't continue to be in a place that's not sufficient for your housing needs because of those things. So, when your desire to purchase aligns with your housing needs, that's the best time to purchase, regardless of what other economic factors are out there.
Awesome, awesome. Okay, Cliff, what came in for you, buddy?
The first question that I get that a lot of people ask me is, why is my home insurance more than my neighbor's and we have similar homes? That's a great question. A lot of things play into factor. First, it could go by credit criteria, all right? Next, it could also go by if you had a previous home, if you had any claims that were done. So the risk is actually will be higher than it would your neighbors, all right? But you can also benefit from having a new purchase or a new home for a first-time buyer because there's a lot of different discounts that will benefit the customer. So there's all different kind of reasons why your neighbor may be higher than you or lower than you, all right? And I will elaborate more into that as we get into
it. I got a question about that. So you said risk. In insurance, is the home the risk or is the buyer the risk? So if I had a claim on this house, I had a fire or whatever, I sell the house to you, does that carry on when you give that person insurance?
That is going under you. So now when you go and purchase your next house.
Oh, so going to follow me,
correct.
Not that house that burned up.
Correct. Not following you.
Good stuff.
So when you buy a new house, and I run it.
Because I have a claim.
Correct.
Got
I'm
it.
going to run a report that's going to let me know when your previous house, you have made a claim for $10,000, $50,000, $70,000 on a claim that you had
And it'll affect my rate,
And it will
my
affect
premium or
your
whatever.
Correct.
Okay.
But now, if the house was rebuilt that you had, and I'm a first-time buyer, I'm gonna qualify for some discounts. You won't. So that's the difference, because I don't have no claims. I'm a first-time buyer. My credit is up to par, so that all is a big factor.
He will expound on that.
Yeah.
Yeah, that's good stuff.
We'll definitely, in future podcasts, we'll talk about like things to do to avoid claims. We'll talk about home warranties. I don't know if I want to jump the gun. You know, Cliff has got some things in the works with regards to, you know, things that he can do that come along with it. So we'll be definitely talking about things that you can do to avoid what I call frivolous claims, right?
Perfect. Good stuff. Okay, my next question I have is actually from Florida, the Sunshine State. Okay, can I have a cosigner on a home? Absolutely. You can have a cosigner on a home. The key is qualifying. It's all about qualifying. So you have a cosigner because you can't qualify on your own, okay? But understand that cosigner's liabilities also factor into you qualifying. So what that means is we take their credit score, their income, but also their debts. Divided with everything, it is still going to be a ratio. But to answer your question, Florida, yes, you can have a cosigner to purchase a home. Good question.
So again, the question that I received last week also is, what is the first thing I should do when I want to buy a home? Well, believe it or not, the first thing you need to do is talk to Sean. You know, I always equate to it. People think that when you're looking for an engagement ring, when you go into the jewelry store, the first thing they ask you, have you set a date? If you haven't set a date, they go, okay, we'll be back with you in a minute, right? They don't want to even talk to you if you haven't set a date yet. We don't operate like that. The reason that you want to talk to a loan officer first is so that you can quantify how much house you're going to purchase. And quite honestly, it doesn't matter whether you're buying in 2 months or 2 years. You know, Sean can take a situation, say, Mr. and Mrs. Jones, today you qualify for X. And what that allows us to do together, me and the client, is start to hone down the neighborhoods that you want to look at, right? Specifically by price point. My dad used to always say the best reason to get pre-qualified is so that you don't fall in love with a home that you can't afford, but also so you don't pass up on one that you can. So, you know, it's not because we're trying to find out how much money you have, it's so we can set up a very specific plan, be it short-term or long-term, on what neighborhoods and areas that you can best afford. So the first thing you need to do if you want to buy a home is talk to Sean. And if you're self-employed, the first thing you want to do is take a look at your tax returns for the last 2 years, and we'll talk about that again on a later podcast.
Right.
We'll be here all day.
We can be here all day talking that. But just expound on this. One thing that we are special as a team is, let's say we have a tight box to fit, your ratio's high. Okay? Chris and I work out the numbers here. Then we go to Cliff. Hey, Cliff, we need to worry about the DTI. So we want to make sure that Cliff puts you into an insurance product where you may have a higher deductible, but your monthly premium is lower. That helps out your DTI. That's, again, something to talk down the road. But all these things factor when you get in the house, okay? You may not get an actual approval just by a high DTI, okay?
Mortgage calculators and most all lenders, when they're factoring what your payment is going to be, they're almost always guessing on what your home insurance policy is going to be. And that's the benefit of having somebody on speed dial that can give you an idea on what that quote actually is, because it makes a huge difference. So when you go online and say, I can afford this and afford that, you know, the insurance policy, and this is why it's the three of us, because all these things make a huge difference on your purchasing power, leveraging. When we start talking about, you know, home warranties and things of that nature, how you can leverage that to be competitive. So, you know, this is why we work together very, very, very well.
And also, that is the main reason why I chose to become an agency broker, so I could have a library of different companies to serve our customers.
Right.
Because it depends on what their DTI is, which is their ratio of income. We could place them into different carriers. So I didn't just want to have one carrier and say, well,
That's
the
beautiful.
rate is what it is, and that's for you. No.
Same with me as a mortgage broker.
Correct. I'll
That's
place
the
them
one
with
straight
what's
Tony.
comfortable for the customer.
We know where we need to go.
Finance.
Absolutely. You have one question. What's your next question?
Yes, my second question that was sent to me is, why is my mortgage company forcing me to escrow my insurance? It's about peace of mind. All right, Sean wants you to have the peace of mind. Chris wants you to have the peace of mind, as well as myself. The difference between escrow and paying it out of pocket yourself, escrow is everything in one bucket. All right, so your home insurance will be included with your property taxes, your PMI, hazard taxes, everything that's your hazard insurance, everything that's in one bucket. So when we escrow it, you won't have to come out of your pocket at all at the closing table because the lender is going to handle it. That saves you some out-of-pocket money when you're just buying a house and going to closing. So we escrow your home policy to the mortgage company. They will actually send a check to the insurance company and pay for your home insurance for the full year. Then they'll take that monthly, that breakdown of the monthly, and put it inside your mortgage. So when you're making your mortgage payment, you're automatically making your home insurance payment as well. And like I said, that's about the peace of mind.
Perfect. So define hazard, because you said, we know what it is, but they know homeowners insurance. So what's the term hazard mean? Is that equates to homeowners, correct?
Yes.
Okay.
And when you look at in your escrow account, it would list as hazard insurance.
And that's because the potential hazards that are
Correct,
potential? Okay.
yes.
Perfect, perfect.
They call this pound cake because it adds pounds. I'm trying to chew my mouth open.
This is not a diet cake.
And then the last point on that also, just so the consumer knows, in most jurisdictions, a home can be foreclosed on if the property taxes aren't paid. And also, when you get a mortgage, you own the home, it's just that the property is security for it. The bank wants to make sure that that hazard insurance is paid, so if something happens to that investment, it can be repaired. And also, the bank wants to make sure that Fairfax County is not going to foreclose on a $500,000 house because you didn't pay a $6,000 tax bill.
Right.
So it's also, in addition to streamlining it, it also helps the lending institution guarantee that the investment that the home secured for remains protected.
Chris, you brought up a good point. Here's the most important thing. It's happened to me. I'm pretty sure it's happened to a lot of you guys out there. When you buy a house and the lender that you start off with, I want to say, and you can correct me if I'm wrong, 8 or 9 times out of 10, that loan is going to get sold to another mortgage company.
Absolutely.
It is very, very important that you as the home buyer, please let your agent know, listen, I have a new mortgage company now, let's make sure that they have the correct insurance information. There's been times when mortgage companies have switched with the client, the insurance company is not told right away, and there's a mishaps in coverage. So it's very, very important that when your mortgage switches or gets sold to another company, please let your agent know.
Yeah, and sold, what does that mean? A lot of times you may do with Bank of America, and they'll sell the servicing rights to XYZ company, okay? But your terms don't change. It's just that now you make your mortgage payment to somebody else. So you want to make sure that Cliff is saying it's critical that you follow up with that, so everything doesn't make you miss payments and then you didn't affect your credit. Okay?
Jeff Thomas wants to know if you're sharing the cake.
Jeff, you are a Mount Vernon major, my man. Of course you get a piece. Great question. Well, good, guys. Well, I think, we're going to wrap up. We're good here?
Sure.
All right?
I'm gonna get
Okay.
this cake. I need some.
Get on that cake.
That's my
Okay.
favorite.
To end, like we want to end, CSC at cscallthingsrealestate.com. By next week, that is going to be our email address, okay? So people can send questions to throughout the week so that we can collect next week. We have the questions to answer like we did this week.
Yeah.
Okay, again, I'm Sean Andrews with Tony Mortgage Advisors.
Chris Logan, Remax Allegiance.
Clifton Durham, TD3 Insurance Agency and Associates.
Signing off.
Have a good one. Have
Good
a good
one.
week.
Still signing off.
Still signing off, yeah.
We about to do pound cake.